So there's the 70% that's going to make an extraordinary amount of money. So I think the S-curve applies to the whole space overall, but the returns are still relatively high to come because we're still pretty early in most of this. And we see that over time. So Bitcoin's returns are coming down. ETH was higher, still is higher, but it's coming down. Solana's higher, but will come down next cycle. Sui or whatever's coming up this cycle, it will still have a couple of acceleration cycles, then it slows down. But what are we going to argue about?
Hey guys, welcome back to Everyday Finance. In this video, Raoul Pal discusses Bitcoin and crypto. Raoul Pal, a seasoned macro analyst and CEO of Real Vision, has advised investors to redirect their attention from Bitcoin's present valuation to its future growth prospects. Pal underscores that the current price of Bitcoin is less significant than its potential to generate value in the long term. Numerous investors often misjudge the valuation of Bitcoin at $100,000, perceiving it as overpriced, in relation to smaller cryptocurrencies that are valued at $1. Pal contends that the valuation is secondary to the potential percentage growth and returns that an asset can generate. The historical performance of Bitcoin substantiates this viewpoint. Throughout various market cycles, Bitcoin has reliably shown the capacity to increase its value, frequently tripling or exceeding that amount during periods of bullish momentum. Pal highlights that the fractional nature of Bitcoin enables investors to acquire any quantity, thereby enhancing its accessibility irrespective of its nominal price. This facilitates broader access to Bitcoin, allowing individuals to invest according to their financial means while still engaging in its potential growth opportunities. Pal's argument is consistent with a core investment principle. Prioritize growth potential and risk-adjusted returns over nominal prices. Bitcoin, characterized by its deflationary nature and a capped supply of 21 million coins, possesses value that is fundamentally driven by scarcity. The function of serving as a hedge against inflation and a reliable store of value enhances its attractiveness over the long term, particularly in light of increasing institutional adoption. From an investment standpoint, even minimal allocations to Bitcoin have the potential to substantially improve returns, given its historical performance metrics. Although the price of Bitcoin appears elevated in comparison to altcoins, its robust network, increasing adoption, and developed market infrastructure mitigate specific risks linked to newer or less established cryptocurrencies. Pal's guidance highlights the critical role that time horizon plays in making investment decisions. The fluctuations in Bitcoin's price may pose challenges for short-term traders. However, those who adopt a long-term strategy have frequently seen favorable outcomes as Bitcoin's value tends to rise in conjunction with growing adoption, clearer regulations, and advancements in technology within the cryptocurrency landscape. And lots of things Raoul Pal discusses, so please watch the video. To end and like, share this video, and subscribe our channel every day. Finance thanks.
Yes, but I don't use Bitcoin because, I think because of my experience in asset allocation over time, I can generally choose the outperforming major asset. That doesn't make me a good, meme coin picker or small big picker, but, generally I get the big trends relatively right. So I think that I can outperform over time. But if I were to step away and say, I'm not going to look at any screens anymore, I'm going to go and travel the world for 2 years, I would buy Bitcoin. Bitcoin, so I don't think it's wrong to think of Bitcoin as the base currency, but it's like US dollars are the base currency, yet we buy US stocks. Why? Because we want to outperform the dollar. US real estate. If you think of a family office from the Netherlands that buys real estate in the US, first they buy dollars and then they try and outperform the dollars. I know people don't think in these terms, but this is exactly what we do. which is why if you're buying emerging market stocks and the currency's weak, it becomes a problem because the stock may go up, but in dollar terms, it's gone down, or in euro terms. So we do need to think in this cross-currency way and what our base currency is. So I don't disagree. I would do the same, and maybe at one point in my life I will do that. But that's, I'm in the wealth accumulation phase and not the semi-retirement phase. On a risk-adjusted return, they're actually better. They massively outperform. As I said, the NASDAQ is down 99.97%. If you take it even from 2017, the NASDAQ's down 50%. So it's an extraordinary outperformance. So it's a bit of a superpower, but you take some volatility to go with it. But really, all this is a technology that has a built-in incentive system in it. So it's behavioral economics meets the infrastructure layer of the internet. So if you think about, and it also changes lives, and it brings people into the financial system and gives people opportunities. There's a very larger reason why this matters, but it also matters just for the internet. In a digital age, we need to be able to transfer, store, and record value. Mm-hmm. And value could be everything from our ID to a contract to a store of value like Bitcoin. So it's a very broad concept that's very necessary for the internet as we move forwards into a more digital age, particularly with AI coming at us fast. But it's also the financial inclusion side. It's also the fact that people can access dollars via stable coins anywhere in the world. I mean, these things are revolutionary. Mm-hmm. And the adoption of this technology is twice the speed of the internet. And it has been. I rebased them both from 5 million wallets versus 5 million IP addresses. And look, wallets is not a perfect thing, but nor is IP addresses. We've all got multiple IP addresses and multiple wallets. Okay, so it's broadly similar. But the growth has been twice the speed of this technology.
Recent inflows into Bitcoin ETFs have reached 6-week highs, coinciding with the cryptocurrency's recovery to the $99,700 mark, indicating a notable improvement in market sentiment. The current recovery indicates a robust beginning for 2025, as Bitcoin maintains its position above this essential level. Year-to-date gains have surpassed 6%, bolstered by Bitcoin's recovery of its 50-day simple moving average, which serves as a critical metric for sustaining a bullish trajectory. As optimism increases, market participants are exercising caution, as there are concerns that a failure to maintain levels above $99,000 may lead to a retracement toward the $90,000 range. The resurgence of the market can be largely attributed to significant institutional interest. On January 3rd, U.S. spot Bitcoin ETFs experienced net inflows of $98 million, marking a reversal from previous record outflows and indicating a resurgence of confidence among significant investors. Fidelity's Wise Origin Bitcoin Fund has successfully raised $357 million, and W Shares Bitcoin Trust has increased its capital by $253 million. The recent inflow highlights the growing trend of institutional adoption, which is a key factor influencing Bitcoin's long-term growth trajectory. Market indicators are indicative of a positive shift in sentiment. The Coinbase Premium Index, which monitors the pricing variances between Coinbase and Binance, has recently surpassed its 14-day simple moving average. This indicates that U.S. purchases are re-establishing their impact on Bitcoin's price dynamics, thereby enhancing market confidence. Despite these favorable advancements, a sense of caution remains prevalent among traders. Experts such as Skew emphasize Bitcoin's robust closing momentum, whereas others, including Crypt Tony, caution about a possible short-term decline after this relief rally. The prevailing mixed sentiment highlights the persistent volatility characteristic of the cryptocurrency market. Analyzing the current market conditions, Bitcoin's robust performance at the beginning of 2025 underscores the increasing influence of institutional investors on market trends. The recent uptick in ETF inflows, coupled with the recovery of essential technical thresholds, indicates a growing confidence in Bitcoin as a sustainable investment vehicle. Nonetheless, the future outlook will hinge on Bitcoin's capacity to maintain its upward momentum and effectively manage critical resistance points. The present market landscape offers a mix of potential gains and inherent challenges for investors. Institutional inflows and a technical recovery indicate robust performance. However, it is prudent to exercise caution due to the possibility of short-term corrections. Long-term investors might consider this a strategic opportunity to leverage the growing institutional adoption, whereas traders ought to stay alert for indications of potential trend reversals. As Bitcoin begins its first complete trading week of 2025, the prevailing sentiment suggests a measured optimism, with prospects for additional growth fueled by institutional confidence and prevailing market momentum. Let's back to the Raoul Pal interview.
Be 50% of a 100 trillion market? No. Where will it be? Where will it settle as an asset class? We don't know. But let's say it'll have the equivalent or larger than gold whenever gold is at that stage. So let's say it's 30 trillion. So there's the 70% that's going to make an extraordinary amount of money.
Mm-hmm.
So I think the S-curve applies to the whole space overall, but the returns are still relatively high to come because we're still pretty early in most of this. And we see that over time. So Bitcoin's returns are coming down. ETH was higher, still is higher, but it's coming down. Solana's higher, but will come down next cycle. Sui or whatever's coming up this cycle, it will still have a couple of acceleration cycles, then it slows down. But what are we going to argue about? That the returns have gone from 150% a year to 60% a year? I mean, this is la-la land in finance, right? Nobody gets given these opportunities. What is a harder thing is why even start a business? Because I don't know almost any business that consistently generates between 50 and 150% a year returns. And you actually don't need to do anything. You just need some capital. Look, it's coming fast because, I've always said, and I think I was the person who invented the term pristine collateral. It's great collateral. So, of course, if you can lend or borrow it out, I mean, we do it in the art market. We do it for any asset that is deemed to be decent quality collateral. So no reason why not. I mean, however, we are just creating leverage, and humans love sex and leverage as the two most powerful forces in the human mind for some ridiculous reason.
And if I rephrase that question, does Bitcoin actually need DeFi?
So let's say you're the guy who bought Bitcoin at $3 and you have billions of dollars of assets lying around and you get zero return on them in terms of yield to pay your lifestyle. I can see why people want to, and you can do it in a pretty safe way. And there's a few platforms that do that. So I get it. For big holders, for financial holders, banks, asset management firms, I can see why they do it. It's not my preferable path because my rule number one is don't lose control of your tokens. Mm-hmm. And any leverage in some larger drawdown means that you end up getting taken away and your coins don't belong to you anymore, and then you're out of the game. And that's, if it's going from 3 trillion to 100 trillion, rule number one is don't get out of the game. Or don't get taken out of the game.
Experts at JP Morgan emphasize the debasement trade as a fundamental aspect of contemporary investment approaches, noting the increasing significance of assets such as gold and Bitcoin as safeguards against economic volatility. Increasing inflation, growing government debt, and the devaluation of fiat currencies have heightened investor interest in alternative stores of value. Gold and Bitcoin have increasingly been recognized as effective instruments for preserving wealth during periods of economic uncertainty. The performance of gold has exceeded projections, highlighting its persistent attractiveness in the market. Bitcoin has shown significant growth, achieving a record $78 billion in capital inflows in 2024. Institutional entities like MicroStrategy have played a pivotal role in enhancing Bitcoin's adoption, thereby reinforcing its position within the larger financial landscape. Analysts at JP Morgan contend that gold and Bitcoin have become essential components of diversified investment portfolios. Gold serves as a stabilizing asset and a safeguard against inflation, whereas Bitcoin presents a high-growth digital option that corresponds with changing market conditions. The limited supply of Bitcoin, combined with its decentralized characteristics, establishes it as a distinctive hedge, especially appealing to investors concerned about conventional monetary strategies. The increasing significance of the debasement trade indicates a fundamental change in investor strategies regarding wealth preservation. The performance of gold underscores its reliability, whereas the growing institutional adoption of Bitcoin indicates its evolution from a speculative asset to a strategic element within investment portfolios. The increasing importance of Bitcoin is underscored by the development of the infrastructure surrounding digital assets, such as Bitcoin ETFs, clearer regulations, and improved custody options. The recent developments facilitate institutional involvement, thereby enhancing adoption and liquidity in the market. The present market landscape highlights the critical need for diversification among investors. Investing in both gold and Bitcoin offers a strategic method for mitigating risk while also seizing opportunities for growth. Gold provides a reliable hedge against market volatility, whereas Bitcoin's unique return characteristics present an attractive opportunity for sustained growth over the long term. In the near future, the dynamics of inflation, monetary policy, and macroeconomic uncertainty are expected to maintain the significance of the debasement trade. Investors looking to mitigate risks associated with economic volatility might consider the strategic benefits of including both gold and Bitcoin in their investment portfolios. This dual strategy effectively tackles pressing issues related to fiat currency depreciation, while simultaneously positioning investment portfolios to capitalize on fundamental changes within the global financial environment. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance. And we will meet in next video. Thanks.